Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. A little bit of a backdrop to this video. For a very long time, I've been in crypto for quite some time, maybe not as long as Bitcoin, or rather as old as Bitcoin is, but I've been in the crypto market long enough that I have, there's been a question that's constantly been swirling around since I was even in crypto, and it was the idea of, or the question of, what will happen to the cryptocurrency market when we do eventually have some type of a stock market crash, if you will. Over the last, not even months, the last 3 or 4 weeks, things have become very interesting, and I'm going to read through some things, and then I'll tell you exactly what I think is going on, because a lot of the effects are seemingly becoming clearer as the weeks continue to go on. So without further ado, let's jump right into it. This week, the US stock market deleted all of its gains made in 2018 amidst a major sell-off. The crash had no impact on the crypto market, showing no signs of inverse correlation, possibly affected by the trade war between the United States and China, along with the increase in Fed rates. The U.S. stock market suffered one of its worst short-term crashes in recent history. Analysts stated that Asia markets are more vulnerable than the U.S. if the stock market crash of the U.S. is to intensify, given the gradual decline in the growth rate of China's economy. They said, then there are worries about what's happening abroad. China, the world's second biggest economy, is showing slower growth. Last week, it reported economic growth of 6.5% in the third quarter, falling short of expectations, and it has been drawn into a trade dispute with the United States, with each side digging in on tariffs of billions of dollars of each other's imports. This was said by a reporter on CNBC. Cryptocurrencies like Bitcoin and Ethereum possess fundamentally different catalysts that affect their prices on a regular basis in comparison to the global stock market and traditional assets. There's a little sad photo. Similar to gold and other types of precious metals, the value of the crypto market solely depends on the supply and demand within the market, unaffected by the performance of the global economy. Hence, the instability of the Chinese yuan and U.S. stock markets, in theory, could positively affect the cryptocurrency market if investors in the traditional finance market utilize cryptocurrencies to hedge their holdings with an asset class that remains unimpacted by the slump of the global financial market. Without reading any further, this has been the idea for quite some time. It's that, first of all, looking back now, it seems, even in 2013, we were probably a bit more foolish than we are right now. I remember hearing many times that in 2008, after they had the financial crisis, a lot of people thought or assumed that the next financial crisis was going to happen sometime around 2012, 2013, simply because what happened in 2008 was never actually fixed. So the problem that we had back then, all that happened is, people threw money at it. That's not even a joke. Remember the entire thing where taxes went up and people had to pay more in order to kind of fix what the banks did, and then the banks were bailed out. None of what they did was actually fixed. They just learned how to swivel around the system a bit more. So the idea has always been, when this does happen, because it's going to happen, there will be some type of a major stock market crash at some point, is crypto going to explode in prices? And this is why I've said before, and I've been saying over the last couple of months, I thought it was very odd, and this is my own personal opinion. I find it very odd that Bitcoin is only 9 years old. Ethereum is around 5 years old, give or take, somewhere around that time. XRP, about 4 or 5 years as well, give or take, somewhere around that same exact time frame. And all the other coins that we have right now are relatively newer than some of the other coins. A lot of the coins that we know right now that are even in the top 10 have maybe launched, let's say top 20 coins have maybe launched in the last year, 18 months, somewhere around that time. And I thought, and still think, it's a bit odd how Wall Street as a whole has accepted cryptocurrencies. There was around 2015, 16, maybe even early 2017 for those who were here at that time. You may remember there was a time when we were laughed at. We were called a scam. There were major people inside of finance who no longer say anything negative about cryptocurrencies. They all used to come forward on a weekly or daily basis, sometimes talking about exactly how bad cryptocurrencies were, how they couldn't stand it, how it was a scam, how anybody who was using it, I think they said they were drug dealers, they were terrorists, they did illegal things, and this is the only reason why we have cryptocurrencies. Lo and behold, sometimes towards the middle or end of 2017, the entire tune completely changed, and over the last 8 months, not even the 10 months that we've had inside of this month so far, we've seen a completely different narrative when it comes around cryptocurrencies. People calling Bitcoin, digital gold. People praising Ethereum for what it does. We've seen so many banks and institutions start coming forward talking about not only Ripple, but Ripple Net, and also using XRP. And like I said, I myself still feel, why was there such a huge shift from people who once hated us just about 12, 13, 14, 15 months ago over to the cryptocurrency side? And my belief has been for quite some time that I think if you are a major financial analyst of the traditional markets, they probably saw what was happening from a mile away. And I guess this in some way kind of makes sense as to why they have embraced the cryptocurrency market like they have, because you have to think logically. I think I mentioned this many months ago, probably just in passing, and I said the current financial system that we have right now is more or less, let's say, 125 years old, more or less. It actually goes a bit further back if you want to look into like Dutch markets and stuff like that. Let's say that's around 250, maybe 300 years old, but let's go with 125 years old. The people who've been in power, the people who have, reigned supreme for many generations, and how rich they are. I thought it was very odd that there were so many people from Wall Street who were turning their backs on the thing that had made them and their families extremely rich, and that they were all starting to switch over to the cryptocurrency side. I don't have any of the articles opened here, but you can pretty much, I'm sure you can find them on Google. If you find like a lot of like the very rich families who have announced that they're getting into cryptocurrencies, a lot of the major players, like type in on Google, like, left Wall Street for crypto, and I'm pretty sure you'll find at least 15 different people who have done so, like major players as well, who are like really for like major institutions. They've all completely left, got over to crypto. They talk about how they see the new wonderful promise of it, and it still is kind of weird for me because a lot of them have only been or known about cryptocurrencies for the last 2, 3, 4, 5, not even 5 years, but they've embraced it so much. My idea has always been, or rather even just the last 12 months, what I've thought is, they see it coming. They've seen it coming. They see that there's something's wrong with the stock market. Whatever happened in 2008 has not been fixed. It was just more so people trying to slightly patch it up. And I think, and I can't say that we are going to have some type of massive stock market crash right now, but it feels like to me that anything that's happening right now is more or less kind of coordinated. I think it's kind of weird that that everything is kind of converging to one point. For those who've been watching my other videos, you may have noticed the dates, or rather the months of November and December of 2018 are constantly in the news. And I think it's a bit odd that we are almost near November 2018 and the stock market is not even slowly going down. They're having a lot of problems and prices are dramatically dropping. But at the same exact time, everyone is starting to talk about launching things for cryptocurrencies around the same exact time. And what's interesting is that even just a couple of months ago, we had no news or no indication that the stock market was going to have anything wrong with it. Like prices were actually going up. But at the same exact time, while the stock market, they were praising a couple of weeks ago, talking about how this is a 10-year bull market in the stock market, and how great everything is, and record profits. Amazon and Apple are now trillion-dollar companies, and we still had more reports from people talking about that they were leaving the traditional financial space. So that's the first start of everything. The entire topic of China and their growth rate. You can kind of, the charts are self-explanatory, but to just explain a little bit more, this is kind of the end of the former period where China had different economic policies. This is when they kind of let everyone in to kind of not do what they will inside of their country, but make money in a more Western way. I guess that's the only easiest way to kind of say it. Their growth rate was extremely exponential. Like I remember growing up around this time and hearing how great China was doing, and so many people, there were advertisements everywhere with people talking about you should invest in China, put your money into China because the growth rate is going to be spectacular. Around this time, you see exactly what's going on. This is 2008 crash, started going back up, but since then, China's output has, even though they have been hiring an enormous amount of people, even on the other side where they haven't, in certain industries where they haven't been hiring an enormous amount of people. Sorry if I'm talking too fast. I'm very excited about this topic. Even on the other side where, how do I say this? Even in jobs where humans have been replaced by machines and automation, it was expected that the growth rate of the country would continue to rise as automation, machines work 24 hours a day. Humans can maybe do about 6, 7, 8 hours before getting tired, having to go home. But for some reason, the output has been stagnant and is expected to continue to be stagnant. And this is why I'm not going to go into a lot of the details, but why China has changed a number of their policies over the last couple of years, trying to get more people into the actual workforce. But once again, very odd that this is all kind of converging to this one point. Over and over again, we've heard in the cryptocurrency space, sphere, whatever you kind of want to call it, that November and December are going to be very important times. And I said before in a video, it was either today or yesterday or the day before, it's a little interesting. It feels like everyone saw this coming except for normal people. And now we're almost at the point where things are kind of looking like they're going to not explode, but something potentially crazy could end up happening. We have an issue right now as well in Argentina where their inflation has, inflation hasn't always been the greatest in Argentina. But this year in particular has been a major problem. This is also similar to, not even similar to what's happening in Venezuela. Venezuela recently reported that they have a $1.4 million, 1.4 million percent, 1.4 million percent hyperinflation rate that's happening right now. Like their currency is worth nothing. There are even people in their country, if you watch documentaries or even type in like on YouTube, type in like Venezuela Dash, which is another cryptocurrency. A lot of people in Venezuela have started paying exclusively in Dash. I was watching something a day or two ago, and they were talking about how there was a guy inside of a subway, and he was trying to pay in Dash, and the actual Visa and MasterCard machines at the subway weren't even working, and neither was something else. Like they weren't accepting like paper money at all, because it would have been like an entire bag that the guy would have had to have in order to get his sandwich. So that's happening there. We also have what's happening in Turkey right now because of the things that are happening between Turkey and the United States. The Turkish lira is also falling. I spoke about this briefly in another video before. The problem with this is that Turkey is more or less connected to Europe, and it's expected that the devaluation or the devaluation of the Turkish lira could have a negative effect on the euro, especially because a number of countries, about 4 of them, I'm not going to name any countries in this video, are either not paying their fees or taxes that they should be paying to the European Union, or they have not been following European law, or rather EU law, and that's all having a very negative effect on what people think is going to happen to the future of the euro. So the euro is not unstable, but it's looking shaky. Turkey is attached to Europe, and they're looking very shaky. We're also having a lot of hyperinflation in South America and also in parts of Africa. Once again, this is all part of at least a fragment of the reason why the stock market is going down. Also, people have been saying that the stock market has been like incredibly overvalued for the last couple of years now. People were saying that they were actually surprised that the prices continue to go up, especially when they were like, normally what ends up happening is the same exact thing kind of for the cryptocurrency space. Like, crypto is valued on the amount of people who are on the network, who's using it on a daily basis, the actual worth and value of the coin in comparison to its actual usage on the network. Same exact thing goes for companies. If companies aren't really putting out as much as they did before, and for some reason the stock value is still continuously going up, like even if they have like a 1 or 2% increase from where they, their output and stuff last year, but the value of the stock goes up by like 25%, usually a red flag, and this has been happening for quite some time. And then on top of all of this, this is the chart for the NASDAQ, if I'm not mistaken. Like it said, and what I read before, is that if you look right around here, it's actually up a tiny bit from where it was before. If you look right around this line, and then you follow it all the way over to about right here, that is it says the 4th of January 2018. Just about every single gain that had been had during a rocky year was completely wiped out yesterday or the day before. That is a very bad indication for a lot of people, because it pretty much, if you have an entire year of gains completely wiped out, it's probably not a very good thing. Same exact thing happened for the Dow Jones Industrial Average. We have this little line right here, and let's go down to, the second, more or less somewhere right here. It actually went even lower. That's also a major problem. So we now have a situation where, how do I even put it at this point? And then on top of that as well, for those who don't understand, and I guess the easiest way to explain what happens during an interest rate hike is pretty much when you're trying to get money, like most basic way. If you're trying to get money from a bank in order to, I want to get a mortgage, I want to build a house, I need so and so amount of money. This is the rate, that you have for the money that you were trying to be lent. If it's very low, typically people tend to borrow a lot more because they know that when they have to pay it back, the interest rate is extremely low. But when you raise the interest rate, especially for people, this typically mainly affects people who are trying to build like high rises or major buildings inside of cities. If you have an interest rate of around 0.05%, lending from banks will be increased because more people will want to take out money. But when you have an interest rate of around 3, 4, 5, 6, 7%, no one really wants to take out money because you have to put back $7 for every 100 that you take out. And when we have an indication that there could potentially be 3 more interest rate hikes, this typically looks bad for the a lot of bankers and stuff actually call this like the free money market, if you kind of want to say that, simply because if you have an interest rate that's lower than 1%, you can pretty much take out in loans as much as you possibly want to be able to do the things that you need, because when it's time to actually pay it back, your interest rate is so low, it won't really affect you that much. Like, this is how, for those who don't know, this is one of the ways that the richer get richer. Rich get richer? Yeah, there we go. Part of the thing that's been the most interesting during the last couple of 3, 4, 5 weeks is that, and I'm sure you've noticed, cryptocurrency prices haven't really moved. This is a 7-day chart, so like it looks more dramatic than it actually is. Things are completely just moving sideways, especially with Bitcoin's price. There are articles like this floating around: has Bitcoin become the new stablecoin? Simply because, and tying this all together, the idea, rather, we've had in the past, we've had days where the stock market has actually dropped. There was some type of an announcement from the Fed, and for some reason, cryptocurrency prices have also, slammed up and down, and people were saying that there was no correlation to it, and then people were doing the analysis, and they said that there actually was some type of correlation, simply because they figured out that on the exact same time when this dip happened, the cryptocurrency market also dipped, and they couldn't really figure out why the cryptocurrency market would dip at the exact same time as the New York Stock Exchange or the Dow Jones. Like, what was the correlation between it? But for some reason, the last couple of weeks, the entire market has become unnaturally stable, and the fact that cryptocurrencies as a whole, or let's even focus just on Bitcoin for this, has not seen any major dramatic drops. Like the fact that Bitcoin isn't down, this drop right here is so we have people on both sides who think that Bitcoin is actually so stable right now that it's never going to move again. I don't personally see that ever happening. I'm pretty sure Bitcoin at some point is going to have a dramatic shift. But the other side thinks that Bitcoin is stable because, or rather, Bitcoin is poised to, in the next couple of weeks. That is not my words. Those are not my words. It's not me saying that. There are analysts who are saying that within the next couple of weeks, they believe that Bitcoin will completely skyrocket, and is based off of the fear that the stock markets will continue to fall. And because Bitcoin is, as it is normally around this time, they say that it's overdue for some type of a bump in price. But also, and I said this before in many other videos, and I thought it was quite interesting myself, is that over the last couple of months, we've had an enormous amount of like major players in the financial world who have all announced that they're getting into not even that they're getting into cryptocurrencies. The fact that they're opening up their own crypto exchanges, their own custody platforms, and like these are like major players, especially with the New York Stock Exchange as well, talking about that the New York Stock Exchange has announced that they're getting into cryptocurrencies a couple of months before the entire market starts going down. I can't say for certain that something is up. Like, it's just, life doesn't work that way. I can't give you any definites. But I personally feel like something is quite weird. Once again, that these companies and organizations and institutions have been barely looking into crypto for about 2.5, 3 years, and now they're all flying into the cryptocurrency market. And we're very close to the point where we're going to figure out exactly what happens to the cryptocurrency market when the stock market falls. We've had stuff from JP Morgan Chase the last week, 7, 8, 9, 10 days, where they were talking about they think that the next crypto crash could happen sometime this year. And if not this year, then next year. And I think the chances of it happening next year go up by like 50% or something like that if it doesn't happen this year. And if it doesn't happen by the end of 2019, it goes up by another 80% of a likelihood of it actually happening. So we're getting to the narrow, I don't think that's a saying. We're getting to the point where if the stock market continues to go down and remains unstable and people continue to lose faith in it, and if the rates go up for being able to borrow money and people aren't buying, and therefore the economy on the U.S.'s side starts to slow down in accordance with the other trade wars and all the other things that we have that are actually going on right now, especially if hyperinflation continues to increase in many different countries around the world. What then ends up happening to our beautiful cryptocurrency market that hasn't been doing anything for the last couple of weeks? Will we experience some type of major growth? Will prices completely explode? Will Bitcoin fall down to 3,000 as people have been saying for, I don't know, every single time that Bitcoin has some type of like weird price action, we get people coming out of the woodworks who are talking about that they definitely think, Bitcoin's heading back down to 1,000. Where they get these numbers from, I guess, is maybe diabolical wishful thinking. I'm not exactly sure what they get from quoting numbers like this. A lot of analysts believe that Bitcoin, these are their words once again, is on its way up. And I desperately want to see, I think that's the best way of me saying it, I want to see exactly what's going to happen to the cryptocurrency market should the stock market continue to fall. And if Bitcoin can hit that, we had that guy, Tom Lee, who says that he still believes that $10,000 to $15,000 per Bitcoin is in the cards this year. And we're very close to November and / December when Bakkt is supposed to end up launching. So we are not very far off to potentially seeing what a lot of people have been calling, or what they say will be the most spectacular bull run that we've ever seen in the history of cryptocurrencies. As analysts now say, that the next cryptocurrency bull run could last anywhere from 12 to 18 months. All in all, it's going to be very, very exciting. Hope you all enjoyed. I keep finding so many things, and it just, like we're at that point where you kind of just want it to happen. I'm pretty sure everyone can feel it in the air. Like there's definitely something going on. And hopefully we'll be able to have, all of us, a very nice Christmas and or holiday season, depending on how you spend your time of year. Thank you all for watching. Hope you all enjoyed. Hope you all are having a great day, morning, afternoon, and or evening, wherever you are, wherever you might be. Thank you once again for watching and or listening. I do appreciate all the support. And I'll talk to you all soon. See you.